squeeze, 55.40. Kevin Green looking at the levels for us. 55 was a rejection at the morning, and we just broke through a KG. But you were looking at levels a little different from 5,500, right? So are we in the clear, or where are we at?
I mean, yeah, we're definitely in the clear. I mean, we're squeezing up right now. I mean, we've been squeezing since around 55.20, actually. The 55.05 area is what we highlighted earlier this morning, but it was a little bit difficult there, Oliver, because yesterday what we saw during the open interest was actually some hedging activity also taking place at the 5,500 level. So there was a little bit of an imbalance there. And that's probably another reason why we saw that sharp move to the downside earlier this morning, not only because of the economic data, some worries when it came to shelter, but also the fact that we just had a whole bunch of institutional and even retail traders that were pretty much loaded up at that strike price as we saw more selling into the marketplace. Dealers had to short more futures. And then once again, we see that domino effect. We saw that megaphone pattern that we've been kind of keeping on our radar over the last couple of trading sessions here. Let me just highlight those megaphone patterns are really signifying that there's an uptrend, but there can be some volatility. And today we definitely saw that. We actually broke through that downward channel. And then we also, once again, hit that 5,400 level, or got pretty close, right? We're hitting ranges. We got really close. Buyers stepped in, and then we saw this buying activity just rip to the upside. Now, this is day two where we have seen these V-shaped type of recoveries, or these checkmark type of recoveries. That's actually a really good sign if you have strong buying activity coming into the market. Now, you can see right now, we're trading pretty much at the upper end of that channel line for that megaphone. We don't take it off of the chart if it breaks just one channel line, right? We keep it on there until we have a definitive breakout or breakdown. And so we could see some resistance here. We do have some traders actually targeting that 55.50 area. That will be a challenge, but this is actually a really good reaction. Let me also kind of just give you a statistic here, Oliver.
Okay.
So for 24 hours, the E-mini S&P futures, this is what we use to be able to, or market makers use, among other things, but from a basic standpoint, this is what they do use to be able to hedge positions. So if they have negative exposure, meaning that there's a lot of buyers of puts that are out there, their risk is to the downside, meaning those market makers. So they have to sell those futures. When you have those puts being taken off of the market, you have excessive call buying. Those market makers are then buying those futures to try to stay delta neutral as possible. And today, for the last 24-hour session here for the E-mini S&P futures, we've actually seen 95% volume on upticks and only 5% on downticks, even though we had that huge flush earlier this morning. That's how strong, the dealer positioning was to the downside. That's how strong the recovery has been to the upside. 95% up volume, meaning upticks, basically hitting the asking price, is very aggressive for a day like today.
Love the way that marries with the technicals, because this was, if we keep that chart up, I mean, this is a really interesting day here in the context of the sell-off early, because that was a really nasty sell-off, taking us right back down to Friday lows. So the fact that we are ripping back to higher highs now, to your point, a higher beta, swingier type of recovery, but a powerful one nonetheless. But when we take into context what you said about the swinginess, which is really important in that kind of megaphone pattern, which, I mean, arguably even widened out more today, is what, KG? Is it that you have to be more nimble, that you're going to have to take maybe smaller bites and profits when you get them? Because there's meaningful range to the downside then if something were to, tomorrow we don't like jobless claims or something.
Yeah. Position sizing is everything. And just because we are in this uptrend right now, it is, a feather in the cap for the bulls, but you have to keep your, head on a swivel here. What I will, though, say is that consolidation that we saw, last week on Friday, it's a very small consolidation, but very impactful. And it's really holding up right now. That just means buyers are stepping in at 5,400 now. And until we break that and clear that aggressively, meaning going below 20 points of 5,400, hitting 5,380, going below that, that level is something that we haven't seen as much of strength over the last couple of weeks here. I think you have to really put that on your chart and keep an eye on that maybe for the next couple of months, because it could be a magnet point in the near term. But you are exactly right here. I would just be very cautious, but it is nice that you are continuing to see a break to the upside as well here today. Let's say that we offset that newer low that we made over the last 3 trading sessions. We did make a newer low technically today, but we are also making a newer high. So let's say that they offset and we keep on moving. I also have it highlighted at that top there with that channel line. I did want to highlight there was a hanging man candle, which is a reversal pattern to be mindful of. Now, I made this chart about 20 minutes ago, give or take, and we actually were able to negate that pattern for now. But if we do see another hanging man really showing up, basically meaning that we opened the market, we opened higher, we pushed down, flushed down, we had buyers coming in, but we still actually closed lower for that candle. That is typically a signal that a lot of technical traders actually do focus on here in the near term. But this is a great market seasonality wise. Once again, unfortunately, September 11th is actually technically a bullish day for the equity markets. There's obviously some other things that actually took place here today, but what a remarkable comeback in today's session, and it really kind of strengthens the narrative that we're trying to get out of this hole that we dug over the last couple of trading sessions.
Yeah, to put in the new low, back to Friday, hold it and come off. I mean, hard to have asked for a better trade for the session. Volume-wise, just to kind of look at some more evidence here, just real quick, because we only got about 50 seconds. KG, what stands out?
Yeah, so what stands out to me for volume, if you're looking at the S&P composite volume right now, it's actually looking pretty well. If we are actually once we get the market on close orders, which should come in the next 5 minutes or 10 minutes or so, we should actually have probably one of the larger volume days, at least for the month. And you can actually see that we're getting out of the seasonality trend taking place. Now, this chart here is just showing that upward trending line. Be mindful of that. It has flipped into a resistance area, but if we can continue to kind of ride that to the upside, we're going to continue to try to do that. But as soon as we have a topping pattern, as soon as we have a hanging man candle actually showing up, that's when you would get a concern about an unwind in the market. And I know you want me to be very quick. An unwinding of calls right now going into the close, Oliver, is the biggest risk for this market. You still have pen risk sitting at 5,500, but right now it's looking really clear, and they want to try to hit 5,550. Let's see if that's going to actually happen right now.
All right. Fun stuff, fun session. Nice chart work, like the levels. 55.36 right now. What's today's candle going to be? Is some kind of hammer or something? Long
yeah, it will be.
Like
yeah, I mean, it's technically a hammer candle. Yeah.
All right.
I mean, I'll look at
Love
it
the hammer.
We get done. I don't want to get overconfident about this right now.
All right, throwing down the hammer. Let's go. Favorite pattern. All right, love it when I get it right. All right, thanks, KG. Good stuff. Nice look at the charts. Appreciate that. Kevin Green looking at the levels.